All right. Well, this is one of the bonuses to this package for you, the triple your listings master training. Okay, so here's one of the bonuses for the triple your listings 4-week online accelerator program. I'm going to talk about tax planning, real estate agent tax write-offs. So right off the bat, just to kind of give you a little bit of my background, I've worked at H&R Block back in 1999, 2000, and I went back to work for them in 2015. And in the meantime, I was doing taxes for my military compadres. So I've been in the tax business for quite a while, and I've learned quite a bit about taxes, especially for certain types of businesses that basically are considered self-employed. And real estate happens to be one of those businesses. So I will get into that. First thing we look at is the table of contents. We have a nice little manual here. I will leave this manual in the downloads for you, along with a ledger. So you'll get the real estate business tax write-offs, as you see, sample business expense ledger, and I'll actually leave the actual ledger in the download folder for you. And from that, we'll get started with the tax write-offs. Really, our objective is to help you organize your real estate tax deductible expenses. And how does that start off? Well, first off, you got to remember that it's your business, so you got to treat it like one. These are your real estate business tax write-offs. Note, you must see a tax professional or CPA for specific advice on your real estate business. I am not a tax professional by that standard, so I don't want you to rely on me or what I say. I cannot represent you in court, but a CPA can, and also an enrolled agent. So if you're going to work with a company like H&R Block or some of the other places that I've been, if they have enrolled agents, the enrolled agents can actually represent you in court like an attorney or a CPA. So if you're going to have complicated write-offs for your taxes and you're not sure what to do, that would be a great place to start. I highly endorse H&R Block because I work there, but I also know that they get information directly from the IRS to make sure that they're in compliance. So when you talk to them, they're actually giving you information directly from what they learn, and that's their specialty. Unfortunately, some of your CPAs do not take all of the recurring courses or continuing ed courses that we, like as real estate agents, we have to take. They don't take all of them. And so sometimes they fall behind on the tax laws and the standards. And if you get stuck having to pay an extra amount of taxes because they misquoted or they miscalculated, then that still falls on you. With H&R Block, I love the thing they call a peace of mind insurance, because for $30, if they made a mistake or it was an honest mistake, you didn't have to cover it. It covered everything up to $5,000 with that peace of mind on $30 for their insurance policy. But enough about H&R Block. This is really about real estate agents and their write-offs. As you can see here, the bottom line is you have to decide as a tax entity, as a real estate agent, what type of entity that you want to be. What entity choice are you? Now, again, this is where you might want to see a business attorney, but the bottom line is you can be a sole proprietor in this industry and collect money as a sole proprietor and pay taxes as a sole proprietor. You can also become an LLC, a single member or multiple members. Then there's partnerships, which require at least two. Then there's corporations and S corp, which obviously have to follow certain things like laws of incorporation or articles, I should say, of incorporation and different board meetings and things that you must follow, because you don't want the veil to be pierced by something that sounds more like a sole proprietorship or something that's not really a corporation. But the deductible expenses, in order for them to be deductible, must be considered ordinary and necessary for your business or profession. So a discussion we got into when I was having this training was one young lady said, well, I have to get my nails done so I, appear professional when I'm doing real estate. And I said, unfortunately, that's not ordinary and necessary for someone to do the business of real estate. And then we started talking about the topic of marketing, and they said, well, what if I got my nails done and put the realtor sign, had that painted in my nails? And then I started laughing because I said, who knows? That might actually work. You get your nails painted and have the sign of a realtor in one of your nails, and that actually gets a conversation started because someone happens to notice it. It could very well fall in the category of advertising. The IRS is not in the habit of trying to find ways to make you pay because you do something that, with good intentions. They're only trying to find something wrong if you do something with bad intentions. So ordinary and necessary, obviously, we have to define those kind of loosely, but only the IRS is really the ones that are going to make that decision. I wouldn't tightrope the line to see if I can get away with stuff. You know what ordinary and necessary typically means in your business, and I will go into quite a bit of what that means throughout this training. One of the things you can also look at is, your non-deductible expenses. Do not include expenses for which you've been reimbursed or expect to be reimbursed by your broker or something like that, or your employer's plan. So if they're paying you for gas mileage to do certain things, then don't try to get gas expenses paid by getting it paid by the mileage, by the mile. And only if you itemize some of your deductions, you have to look at that as well. You can't itemize and write these taxes off at the same time. It's going to be one or the other. You will benefit from deducting employee business expenses only to the extent that your total miscellaneous itemized deductions exceed 2% of your adjusted gross income. Again, this is something where you'd have to talk with a tax professional who's currently doing taxes to find out what that actually means. Now, what I will get into and kind of give you a great idea of what the IRS does look for to determine if they are deductible is just some common sense things. The IRS uses 9 different factors to determine if they are deductible. The first one being, are they regular and continuous in manner? So is it something that you are doing on a regular basis? Do you do this all the time? If you're doing real estate, even if it's, 2 or 3 houses a year, but every year you're selling 2 or 3 houses, then you're pretty continuous and regular. Do you have the expertise to do this job, or do you have a knowledgeable advisor? That's why real estate is one of those areas that so many people can get into, because even if you don't have the expertise, you have a knowledgeable advisor that's called your broker. Then it's effort versus time spent. Well, how much effort you put in versus how much time you spend. Yeah, as long as you're putting in effort and spending time, there is no actual way to differentiate one versus the other. You just need to be doing both, putting in the effort and spending the time. As long as you're doing that, then you're meeting the requirement for the IRS. Can you expect assets to appreciate in value? Well, even if they don't, you can still be in real estate, but you expect it to. Let's say that you expect the property values to go up in the house that you purchase as an investor, but in fact they go down. Well, there's nothing you can do about that, but you can't expect the asset to appreciate in value, and that's another requirement met. Success in similar past activities. Well, there's nothing that says you have to have success in similar past activities. That's more of a myth, but at least you've given it a try, and that shows again that your intention is to try to make this work. So you've tried other, type of business that are similar to this, and they didn't work out. So you keep trying. There's nothing that says you can't keep trying. Matter of fact, that bodes well for you, showing that you actually have a true intention to do this type of work. And a history of loss may negate profit motive. No such thing. If you have a history of losses and you're still trying to make a profit, that's the main thing. Whether this is a hobby business or your self-employed business, as long as you are trying to make a profit, that's what it boils down to. Now, can the profit be occasional? Absolutely. Like I said, if you're a realtor and you only work 3 months out of the year because you're a school teacher the other 9, as long as you're making profit every now and then, that's the key. Now, after 3 or 4 years, they're going to wonder why you're still in business if you haven't made a profit. So that may become the issue. And then the financial status from other sources does not negate what you are doing as far as trying to make a profit in real estate. So if you're getting money from other places, you're working a W-2 job in one area, but you want to do real estate on another, like I mentioned, a school teacher, and then become a real estate agent, absolutely no reason why you can't do that. And then elements of personal pleasure or recreation. Doesn't matter. Some of the best write-offs you're ever going to get is because you decide maybe to go home on a family reunion, but there happens to be a real estate conference the week that you decide to go. Well, if there's a real estate conference the week you decide to go, and that's the reason why you pick going to that state, there's nothing wrong with that. As long as your primary reason for going to the city is simply because you wanted to go to that seminar, and you just happen to write off the mileage, whether it's by tickets from plane or for driving and the gas mileage. Um, Either way, you're going to get that as a write-off because you chose to pick that week as opposed to any other week to go home and visit your family and friends. So these are all allowable things that happen, whether it's personal or pleasure or recreational, as long as, again, you are trying to do the right thing. The government doesn't like fraud. So if you intentionally misrepresent yourself, there's always going to be a problem. I think that's probably the best guidance I can give you from that section. Now, as far as expenses to deduct, there is a mileage log. So some people think about the maintenance on their vehicle. I would just tell you that in most cases, if your car has been if it's relatively new and reliable, then the mileage log is probably going to be a lot better to write off because you get like 55 cents per mile. If you think about that, if you do 10,000 miles, that's $5,500. So really doesn't make sense to do the maintenance unless, of course, your car is not in very good shape and you know that having to use a car for work, it's going to cost you a lot in maintenance, and you keep those records. The best thing you can do is keep a mileage log and keep those maintenance records, and then let your tax professional tell you which one will be the best option for you. Now, for professional fees, obviously, we have quite a few of those in the real estate and slash mortgage industry. So we think about dues, we think about liability insurance, we think about E&O insurance, we got legal and professional expenses. So all of your training, all of your other write-offs, any courses that you purchase, your professional licenses, memberships, the board memberships, and any publications you purchase that keep you well informed for market data. These are all great things you need to have to write off your taxes or expenses to deduct from your taxes down the road. Then there's also office expenses. Now, a lot of people don't realize that pretty much everything you purchase can be written off in taxes. And they will write it off in a Schedule C, and then they use that Schedule C to deduct from your current income, and then you're in a lower tax bracket, which could end up getting you taxes back if you work the W-2 job. Most cases, if you're not W-2 and you're completely a 1099, that's going to be a little bit different. But the office expenses that are typically written off in this industry, a camera. Think about it. We use a camera all the time. So if you use your iPhone, maybe a portion of that can be written off because it's not business use only. But there's formulas to figure that out. Again, you want to talk to your tax professional. Then you got a printer, a copier. If you bought one of those and you use it for business, there you go. You can write off business cards, badges, software, computer equipment, office supplies, postage. So when you do those mailers for those campaigns, just listed or just sold, these are the kind of things you can think about. Photocopying and printing. You want to keep up with all of these different fees that you pay. Even if you get them at a discount, you can still write them off. Then there's sales fees. What about your advertising? All this money you spend on all these different tools to help you advertise, your autoresponders, the different CRMs that you purchase, the fees you use, you have to pay for your business. If you happen to help out with appraisal fees, courier fees, keys and locksmith, lock boxes, open houses, everything that you do in this industry, you get to write off as your tax. Sales assistants, anyone that you hire to help you out, there you go. There's another fee that you can write off. Signs, flags, and banners, all included. I mentioned a little bit about travel already, but let's say you are taking a trip. You do get to write off that hotel as long as you're staying there. Even if you use part of it in conjunction with visiting family or friends, as long as your main purpose for going there happened to be that typical real estate event. We have events all the time with the current company I'm with. They go to New Orleans, they go to Mexico. All of these things are tax write-off because they're associated with business. If you take out a client to entertainment or you take them out for meals, typically you're going to get half of that as a write-off. Then there's the vehicle information. You need to, keep track of the year, make, and model, the date you placed it in service, purchase cost, and own or finance or lease the vehicle. In some cases, you can write off the lease amount that you're using, especially if it's for business. But also, if you own the car, it's going to divide up the amount of miles that you put on there for business versus sales, and it's going to give you an amount of money for each or for the category of business. So that's basically how that works. Now, people ask me all the time, how in the world do you keep this whole process pretty simple? Well, the easiest way to do that is with a ledger. Like I told you, the biggest thing for me when it comes down to how I coach, how I train, how I mentor, it's really the tools to help you implement the strategies that I teach you. And it's no different here. Here's a sample of the ledger that I put together. And as you can see, following this thing from left to right, every single month, there's 31 days maximum in any month. You want to write off the miles. So if you travel a lot, and you got to remember when it comes to miles, it's not in and around mileage. Correction, it is in and around mileage, but not to and from mileage. So it's not to and from your home to work, but all the miles you drive in between. Now, there's an exception to this rule if you have a home office. If you have a home office, then leaving your home and showing people multiple properties and coming back all counts as business mileage. So you want to track every single one of those numbers. And then let's say you get a paycheck on the 1st and a paycheck on the 10th and a paycheck on the 20th. Well, you fill them in these columns here on this ledger. Any fees you pay, we already talked about some of the tax deductible fees, the office expenses, supplies, advertisement, education, travel, lodging, entertainment, meals, All of this stuff can be included in this tax ledger. I like to use the manual version, and if I have a software like I use QuickBooks Pro Self-Employed. That app is awesome. You download it to your phone. It's like 20 or correction, maybe $10 for the year. They charge you $9.99 if you pay for it all up front. Or actually, correction, I'm wrong. It's $9.99 per month, and I believe $100 or $99 for the whole year. But this software is really awesome. It allows you to basically swipe left or swipe right, depending on whether it's a business expense or a personal expense. Either way, this is really good software or app for you to use to keep up with your expenses. Me, I like to take in this form here, and I'm going to leave a copy of the download of this actual expense ledger for your tax planning. But I like to write this stuff down, leave it in my car. I make 12 copies of the sheet here, and then the final one tallies up on its own for the end of the year. And I take this and turn it over to my tax professional. Every tax professional I've shown this to says, "Man, this is amazing. This does all the work we have to do if we're going to count up all your receipts." And the IRS, all they basically say is, we want you to keep a record of what you are deducting. So when you have this entire form here with all the numbers added up for the entire year, and you can even turn the 12 months of this in as well, you've kept a great record of all your expenses. Now the receipts may be kept in, another place or some kind of a binder that you keep them in, but your tax records are supposed to be maintained for about 3 years. And as long as you're doing that, this particular ledger that I created for you, it does so much work, and it's a very visual tool, so you can write all this stuff down. Like I said, I just put it in my car with me, and then everywhere I go, I'm writing down the mileage. Every time I get a paycheck, I write that down. Then I put the fees, office supplies, advertisement, education, travel, lodging, entertainment, meals. All that stuff is getting logged so that when the time comes for my tax professional to grab my information, they get this. They use this to fill out the Schedule C and the rest of my taxes, and we are good to go from there. But that's literally everything you want to know from A to Z when it comes to taxes from someone who's done that for a while but is not your tax professional. Again, I highly recommend that after hearing everything I've had to say about this, that you go to your tax professional, whether it's an enrolled agent or a CPA, or just someone who does taxes and been doing this for a while, maybe one of their senior advisors who is consistent and good at helping real estate agents. Talk with them. This information I give you is just to make sure that you're on track and that you're actually thinking about your taxes. Because what I don't like to see happen with people that I train is that they find out at the last minute that they owe a lot of money on taxes because they did really, really well. And in the first quarter of the next year, they're spending all their time trying to close deals just to pay Uncle Sam. And I don't want that to happen to you. So track your miles on a regular basis. Use this ledger or one similar to it. Use an app like QuickBooks Self-Employed. It's an awesome app. And actually, I think it's like $5 a month now that I think about it. I use another one that was $9, but I think this one's actually $5 a month if you get it at the when you purchase it, when you first look at that app. Don't wait too long. I think it goes up if you don't get it the first time around. But anyway, you know how sales go with those apps. Either way, use QuickBooks Self-Employed to help keep you on track when it comes to your taxes. Again, here's another video. I hope this helps you out. I'd like to hear your feedback in the emails and let me know if you like this information. And I will see you in the next video. Thanks.